Well, leading up to the most recent federal election, both sides of politics said that they would tweak the First Home Guarantee scheme, and this scheme is in place at the moment that allows first home buyers to effectively rock up with a 5% deposit, and then they won't have to pay lenders' mortgage insurance. The federal government effectively steps in and provides the security guarantee that lenders' mortgage insurance would provide. At the election, or pre-election, both sides said that they would increase the income threshold so you could earn $1 million a year and still access this. They were also removing the caps on how many spots per year would be available. And also they've increased the purchase price limits around Australia. Now, if you're listening to this podcast when it drops on Tuesday, the 26th of August, 2025, we're recording it on Monday the 25th. Yesterday and this morning, we woke up to the news that the government, the Albanese government, they had planned to roll this change out at the start of the new calendar year. However, it was announced that they're making it effective from October. So what we're going to do today, I am joined by Rach Kroon and John Pidgeon from the This Is Property podcast. We're going to discuss some details. We're going to do some case studies. We're going to talk about some other things about, well, what if I'm an investor? What does this do to the property market? What if I'm ready to buy my first home and I was on track to do it maybe in the new year? Should I do it sooner? Should I do it later? We're going to discuss all the things and we'll get into it right now. Rach and John, welcome back to the show on such short notice.
Thank you.
Thank you, Glenn. Pleasure.
And we'll get into it right now. Okay, so but potentially, Rach, you've got some case studies on the real-world implications for this for first home buyers. Can we start maybe some opening comments from you, Rach?
Yeah, so this is some huge news that's come out this morning. I mean, my team are very excited and everybody's on the phones already. It's only 10 o'clock in the morning. And I think what it's going to do is allow a lot more people into the market sooner. So that moving from from January through to October is actually going to have a lot of people get in with a lot less deposit and save a lot of, lenders' mortgage insurance. Everybody's very excited in the market at the moment.
Yeah. John, any opening comments before we get to some examples?
Yeah, Christmas has come early for a few people, hasn't it? So I think, the 5%, obviously, if we've got that waiting around, then we can use it in October for first home buyers. But I suppose investors' sentiment is, well, let's get in before January prior to today's news. So they'll be scrounging around trying to buy property ASAP before October now. So it's some interesting times ahead in particular markets, which will obviously flesh out.
Yeah, and I'll just start by reading a statement that Albo said. I got this from the AFR. He was obviously on some type of press conference. They say this will have a beneficial impact together. All the measures that were put forward, Albanese said. Housing Minister Claire O'Neil said the policy was expected to increase the price of housing by 0.5% over 6 years. We recognise that there's just not one thing that you can do. So here's one policy that will have an impact. Albanese told reporters in Canberra, arguing that the government has a suite of plans, including the Housing Australia Future Fund, the Shared Equity Scheme, and build-to-rent incentives for private rentals. Albanese said the deposit scheme will get more people into the market. You can't look at it in isolation. So my opening comment is maybe the 0.5% is a bit rich. It could be a little bit more than that, but I don't know. They're obviously looking at some type of modelling. Rach, do you want to maybe show us some real-world case studies of people and clients of Sphere Home Loans that your team are working with at the moment and how this really would impact them in a positive way?
Yeah, so I asked the team just to reach out and give me a couple of examples this morning of people that they're working with in the market and what difference it's going to make for them in real dollar terms. So just for example, if you were purchasing a property as a first home buyer in Queensland and you're buying for $750,000, your contribution today would be at that level you'd pay stamp duty, but you'd also pay lender's mortgage insurance. So you may need over $70,000 to actually get into the market. But once that first home buyer scheme comes in, you would only need about $43,000 because you're paying some stamp duty because there's still some stamp duty at $700 in Queensland, but you only need a 5% deposit. And you also would be saving about $20,000 in lender's mortgage insurance. And that's the big thing. The lender's mortgage insurance, as well as needing less money at the time you buy. I'm trying to give another example of one that I've just had come through, which was somebody buying in New South Wales, and it was at $1.5 million. So that's a really big purchase price. And over the last scheme, especially with their income and the price that they're paying, they would have no concessions and no help to get into the market. That's a pretty big purchase price. Currently, they would need over $200,000 to get in. But once this scheme comes in October, these same clients are going to save $50,000 in lender's mortgage insurance and actually need $70,000 less to get into the market. So at $1.5 million, they're going to need $145,000, which was going to be in January, but now that's moved forward until October.
And just to clarify, everyone, the income caps that are in the scheme at the moment, it's $120,000 for an individual or $200,000 for a couple, and there was maybe up to 20,000 spots per year. There were some other spots for some other carve-outs, but effectively there is no income cap now and unlimited spots.
So, and just another one, we had some clients that were actually going to move out of a city to be able to buy a home an hour out of the city. So they're planning on commuting. Their purchase price is $800,000 and they've got an income jointly of over $200,000. So they weren't qualifying under the scheme because of the income caps. So they would need at the moment over $80,000 to get into the market, and they'd be paying $25,000 in lender's mortgage insurance. From October, those same clients, so they've got an income of over $200,000 as a couple, they're buying for $800,000, they are only going to need $45,000 to get into the market, all up. That's a huge difference. And we've got hundreds of clients on the moment that were on savings plans getting ready for January, but this has just changed the goalpost for them. Some are going to try to get in earlier, but there'll be a lot of movement off the back of this.
Mm. And I think before we go on, because I'm just conscious that, we live in this world every day and we sometimes take it for granted that, everyone knows about this stuff, but maybe it's worth just pausing for 1 second and just reiterating. If someone ordinarily wanted to buy we'll just round numbers, $1 million house, right? To get lending on that, you would have to probably have at least a 10% deposit and pay a mortgage insurance policy to get the loan.
That's right. So that example that I just gave with the $800,000 purchase, the reason they would need now $80,000 to get in the market would be the fact that they need that 10% deposit or not. But even at that point, they'd be paying $25,000 in mortgage insurance. So the two things that they're saving are the lender's mortgage insurance, which might be 3 or 4% of your loan amount at 95%. But also they need $50,000 less to get in. So that's going to mean a timestamp that they can actually enter the market a lot earlier. And saving $45,000 is a whole lot easier than $80,000.
So the federal government is effectively becoming the security, because ordinarily you want a 20% deposit to get good rates and, a healthy loan to value ratio. So if it was $1 million property, $200,000, well, I don't have 200, I only got 100, we'll pay an insurance company to guarantee. So if you don't pay and the bank doesn't get their money back, that insurance company will pay the bank. But now effectively the government are putting in as security that 15%. So first home buyers can buy a house with a 5% deposit.
That is completely right. So where people used to say you'd have to save a 20% deposit so you don't A, pay mortgage insurance, but B, have a higher rate, because banks charge you higher rates if you're borrowing 95%. So now you don't pay the mortgage insurance if you've got the 5% deposit you're using the guarantee, but you also get the rates if you had a 20% deposit. And that's a big thing. You're not paying high interest rates. You're paying the rates of somebody that had a 20% deposit.
And have you got one more example there, Rach?
There was one that just got sent to me of a client at the moment. So these are clients that are buying in Victoria.
Yeah.
And they're actually just getting their pre-approval at the moment. They were going to be, they're both on quite big incomes. So they're on a joint income of over 250,000. They're buying for 800,000. They were just organising their pre-approval with one of my team, and they were going to have $25,000 in mortgage insurance when they bought. So now they're going to wait until October, and they'll save themselves that $25,000 in lender's mortgage insurance by buying at that level. They'll still pay stamp duty in Victoria because of the threshold. So you've got to look at two things. You've got to look at both the price caps for the First Home Guarantee, which, just quickly, it's going up to $1.5 million for New South Wales. It's $950 for Vic. Queensland, it's going up to $1 million, and say Tas is $700,000. But the other thing that you still need to look at is the state-based incentive of stamp duty concession. So that is still in place. So the stamp duty concession in New South Wales is up to $800,000, but you pay a little bit less at $900, and then you start paying full freight at $1 million. But somebody in Victoria, the stamp duty concession's only $600,000. So, yeah.
So people can actually use the federal scheme and their state-based schemes.
So you can layer the national scheme of the 5% guarantee. You can layer that with your state-based stamp duty concession. You can also layer that again with the First Home Super Saver scheme if you've been saving in your super. And the other thing you can layer it with, if you're building or buying something new, is the First Homebuyer Grant, which is state-based.
Yeah.
So in Queensland at the moment, that's huge.
Yeah. So, I mean, there's legitimate cases. So what you're saying is if someone was about to buy right now, they had their ducks lined up, we're going to do this, we're going to buy and pay some lenders and mortgage insurance, get in the property, we didn't want to wait till January. The thing is like, okay, we'll definitely wait 2 months now because there's unlimited spots, we've got a big income. Why wouldn't you wait?
Well, I think that's still going to be up to the individual to think what will happen in the market in those 2 months, because I know that a lot of people were trying to get in before January. That will probably change until October now.
Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.